Hi, this is Brent with Trade Therapy. Today we're breaking down Procter Gamble, one of the most instructive examples of how Wall Street uses time without breaking the overall structure of the chart to accomplish their goals, and I'll explain that as we go. Back in September, we had flagged this initial shakeout right here as a tactical shakeout, not an emotional breakdown that was associated with the yen carry trade. That's what this was right here. This was tactical. We can see price drop down to long-term trend support. This red line is the 55-week exponential moving average. We see price drop down there, but we see volume surge up here. We have it labeled as number one for the first shakeout. We see volume surge here supporting it. That's not a breakdown. That's defense of this long position right here. It also allows them to take out as many of these retail traders as they can before they push price up to new all-time highs right here. This is all tactical. This is part of their plan. They want to take people out and then lure them back in with a rush up to all-time highs, leading into shakeout number two right here, where we see again a long wick. But what we don't see is strong volume support right here. We see volume stayed flat. The response was very quiet. And that's really the tell. The tell is that the stock was no longer in a reactionary phase. It had entered into this time-based reaccumulation phase. We see that price reacted as if it was supported by high volume with this long candle and this rush back up to new all-time highs, but it was not. P&G spent the next several months right here building out a wide, orderly base. We see a lot of volatility, another drop back down below the previous shakeouts, rushing back up to all-time highs again, only to be rushed back down again. We see volume surging here as prices drop down below the shakeout level. That is classic reaccumulation activity. We see RSI carving out bullish divergence. And really, more importantly, there was no structural failure here. So that's what I meant when I say that Procter Gamble is a great example of Wall Street using time without breaking the overall structures. The playbook was really pretty clear here. One shakeout gets absorbed, rush to all-time highs. Next shakeout was not absorbed. That's your tell, but rushed back to all-time highs only to turn around and have the rug pulled on it. The second shakeout was silent, but the reaction to it was not. So now we see volume coming in. We see momentum possibly beginning to build here, and we'll see what Wall Street has in store from here. This is not noise going on here. This is preparation for the next stage of the markup campaign that Wall Street is going to be conducting here. My name's Brent. This is Trade Therapy. We break down institutional structure. We break down institutional strategies so you can trade the setups and not the sentiment and avoid the news.